Hello there, I hope you're doing well. In this video, I'm going to talk about quarterly kill zones and quarter alignment, the concept that turned me from unprofitable to profitable. Stop treating every session the same. Stack the quarters and only trade when the time is stacked in your favor. What quarterly theory kill zone is? A quarterly theory because it is a specific time window where two or more quarters from different cycles overlap. Both represent the same quarter number. This overlap creates a higher probability window for price to deliver a clean direction move. This simply means when the market's accumulating, right? Let's say this is our Q1, right? This is our Q2, like we kind of still, not doing anything, right? And then when the Q3 comes out, what are we expecting here? We're expecting a higher probability window to deliver a clean direction move. It's either to upside, right? Take out the liquidity on highs or on the lows, or expect something like distribution to occur. All right, my personal kill zone, 9:30 to 10:30 a.m. Eastern Standard Time is Q3, the daily cycle New York AM session, and the simultaneously Q3 of the 90-minute cycle within that session. Guys, now I get more into depth. Q3 of Q3. If you don't know this is what simply means. Let's say it's Wednesday. What is Wednesday? Wednesday is a Q3, right? Sorry for the draw, but Wednesday is our Q3. All right. What is this? This is a 90-minute cycle, right? From 9 till 10:30 a.m. How many minutes? It's 90 minutes. All right. If you divide it by 3, like 9 till 9:30, right? That is, oh my God, I need to stop drawing. 9 till 9:30, and then 9:30 to 10, and then 10:30 to 10 to 10:30, right? And when I trade after the market open, after 9:30 till 10:30 max. That is our Q3. Within a Q3, for example, Wednesday. Both cycle in the distribution quarter at the same time. Exactly, the distribution day, which is our Q3, so to say. This is why almost every clean move I take happens in this window, and why I'm only on charts for 90 minutes per day. Well, max 90 minutes, and minimum is like 40 minutes. Like I spend between 40 to 90-minute time per day. Like I trade, I come to the market around 9:15 or 9:10 a.m. Eastern Standard Time. I annotate I do my annotation, I do my analysis, my bias, figure everything out. And then when the market's open, I trade after 9:30 until 10:30 max. After that, there is no trading day for me. But of course, we got London also, like from 1:30 p.m. till 2:30 p.m. for example, right? Or we got Asia, but I mostly trade New York AM. An example, we're here 9 till 10:30. Like I show up to the market, to the charts around 9 a.m. Eastern Standard Time. I annotate everything, right? And then I execute after 9:30, after market open, right here. I do not take any trade before that. As you can see, it's all accumulation. After that, it's a good entry. It's a good, good way to execute at this window. Then after this, I do not trade. This is a good example. Like we got our manipulation, then we manipulate to higher, and then we inverted this gap, right? And then this is a good short, for example. Yeah. All right, here we got overlappings, we got function, and we got examples. First, Q2 of Q2 means, which is simply manipulation kill zone. For example, Tuesday London or daily to plus weekly Q2. For example, Tuesday is our Q2, right? Let me pick another color. Tuesday is our Q2, right? And London is also our Q2. And if you look at daily, which is our Tuesday, and if you look at weekly, the second week is the Q2. If you add this all together, you will have a good, good understanding. And the third, Q3 of Q3 is like distribution kill zone, which I do usually. 9 a.m. standard time till 10:30 Eastern time a.m. 10:30 a.m., which is daily, right? For example, it could be Wednesday, right? Which is our Q3, and then 90 minutes. We got, yeah, 90 minute session because you divide. This is like a 90 minute from 9 till 10:30 is 90 minute session, right? And divide that by three. You got Q1, like Q2 is our 9:30, like manipulation. That's why I don't trade that. And then I trade the distribution, which are on 10. That is simply our Q3. Lastly, we got Q4, which is reversal, kill zone, or continuation. Yeah, I don't need to draw continuation, but you get it. And then Thursday PM, that could be our Q4. And then here we got daily, which will be Thursday, basically, plus 90 minutes, Q4. Before diving deeper, let me just show you an example of what I mean and how to apply. And also understand that time is fractal. No matter what you do, it's all fractal. I'm right now on hourly time frame. I have an indicator which boxes everything and it's everything pro, right? The days, for example. Now, if you look, zoom out, you got April, March, May, June, right? All right, so let's say what is our Q2? Right here, April is our Q2 opens, right? This is our Q2 from here till here. And then and then June is our Q3. You get the idea, right? Now, if you zoom in if you look at the weekly, if you zoom in, these are the weeks, by the way, guys. From here, Monday till next Monday, Monday till the next Monday, this Monday till this Monday, which is like 5 days window, like from this Monday to this Monday, this Tuesday, Wednesday, Thursday. This is a good example. Now everything's already annotated, and the best I recommend you to looking in an hourly time frame. It shows more of a direction, right? Like more of a bigger picture, more of understanding, more bias, more it's more clear to be honest for me. Um, now you can see, for example, you can annotate from Sunday, let's say Sunday, 6 p.m. So Monday, 6 p.m. That is a day, right? And then look at the other day, 6 p.m. until the Tuesday, 6 p.m. This is another day. And then you can look at higher time frame, for example, hourly. Look, what do we do for the day, right? Or let's say we're trading here. What do we do for the previous day? We accumulate. All right, what are we expecting today? Manipulation. All right, we manipulate, maybe took out this item and also this low. What are we expecting after this day? If we already the previous day, let's say Tuesday, we already took out the buy side and the sell side. What are we expecting on Wednesday? Of course, a like accumulation, which was actually accumulation day. Like it's an inside day. If you look at higher time frame, like a 4 hour or daily, it's an inside day. This day closed inside the previous day range. What are you expecting day after that? A distribution. Why? Whether to the high, reversal, or continuation, which in this case we got a reversal. What it was strong reversal. Why? Because this day, previous day, was an inside day. We didn't either took out the low, neither the high. So what are you expecting the day after that to do? The distribution. Hope you got something from this, guys. All right, guys, let's dive a little bit deeper. At the weekly cycle, right? We got Wednesday, Q3, which is our distribution day. We got New York AM, Q3. New York is our Q3 daily, right? Plus 90-minute Q3 from 9:46 till 10:08. Guys, now I'll break this down also, this kill zones as well. Micro Q3 equals 4 overlapping Q3s. This will give you really high probability of distribution day because it's Q3 within Q3 within Q3 within Q3. It's all fractal. The move that prints in that 22-minute micro micro window on a Wednesday in the EM session is as high probable as the game produces. Guys, if you have this day, you should pay attention to this day. Pay attention to weekly, Wednesday, all right, when it's New York AM, all right, when it pay attention to 90-minute, Q3, which is also Q3, pay attention to the kill zones, and then we got all the 4 overlapping Q3s. Now, guys, let me break this now. I'm smiling when I look at this. Guys, you probably have seen some people making their own kill zones, right? This one, we got this one. This is a classic ICT kill zone. We got this one, and then we got this one. I'm not gonna go too much deep into this, but if you train your eyes, guys, if you pay attention to these zones, the markets tends to reverse, not always, most of the time between either this time, this time, this time, or this time, and then ends around somewhere here. Guys, I'm not gonna go too much deep because I want you to do the hard work. I don't want you to, because you have to own it yourself. Like if you become profitable, don't say that Luan, you made me profitable. Instead, it's you yourself that you made yourself profitable because you took the risk. You you trained. You spent all the time learning in the charts, showing up, the discipline, the motivation, the courage. You have the courage to do this. You have the courage to look at this video, and you have what it takes. So it's all because of you. But yeah, let's jump into the next. Last but not least, the timing edge. Time, guys. This market's run around time. It's always time first and then price. So the edge isn't knowing the session, right? Your edge, your strategy is not about session alone. The edge is knowing which session, on which day, at which time, are all saying the same thing and only trading that window. Yeah, man. I mean, everything's fractal. Look at through the bigger picture. Look at through, weekly, daily, hourly sessions, 90 minutes. Pay attention to those. And it's look what day are we in. Some days you might predict what the next day will do. You might predict, you will predict what the day will likely do, whether the day will be consolidation, whether the day will be continuation, whether the day there will be distribution. Should I trade or will the day be low probable? Should I just skip the day? You will know this, guys. Uh, but yeah, hope you got something from this, guys. Let me know what your thoughts are. Leave a like, subscribe. See you guys next time. Be safe.